Hello and welcome back to this edition of Daily Actives brought to you by Bootleg Macro. I'm Dustin. We are looking at AMC once again, and ooh boy, is this an ugly chart. If you saw my video from just a couple of days ago when we saw this big move down, I think it was probably on Monday of this week, clearly, because that's the day it was down 35%. Even though we are up probably, 10% over the past 2 days. We went from 339 on Monday, now we're at 375. There's still no reason to really want to buy this. This is classic mean reversion. This is what you see where mean reversion happens because the average pulls it back up. Now, the price at 375 is still below the 5-day moving average, which is at 421. It's still below the 23-day moving average, which is at 471. It's going to take a long time for those to catch up to where this price is unless we get aggressive moves higher, which I do not suspect. We're positive on the 1 day. We are still negative on the 5-day, 15-day, 1 month, 3 month, and 6 month. If we look across now, we do have confirmed 2 go short signals on the short term, intermediate term, and longer term. We are still bullish on the short term, intermediate term, and longer term. I suspect that will go completely flipped by the end of the week. We will check back if you get this back on the most active list on Yahoo Finance. Now, we look here at the rolling sentiment. We have seen a falling bear ever since it looks like the 9th of August. So that was very foretelling as we ended last week on the 11th at a high and then dropped on that Monday. We see that the sentiment essentially is falling, which you'd expect because we did get all the way up to 61% or 60%. Excuse me. We do need to get down back around 50% or lower. On the 10-day, we went from being at 70% on Monday now down to 53%. That is very positive to see. The only way that this is going to work is if we really start to flip some of these bear key 3, which we're going to have 4 tomorrow, and we've got coming falling bears. I mean, could you think of a worse setup in a stock? I mean, bankruptcy maybe. I guess maybe if you have some ape shares. The thing is with AMC right now is that you essentially went sideways for 9 months. This is a 9-month chart. You've got the month of August here in 2023, and you've got December of 2022. You're talking 9 months of data is what you're looking at right here. Was that fun? Did you go anywhere? Was there anything constructive that happened in AMC in the past 9 months? I mean, if I even take it back to the past 3 years, I don't see anything that makes me even want to own a share, let alone really pay attention to what's going on here, unless I'm short long term. Because right now what we can see is that this is a disaster. It's a disaster from the standpoint if you're long. I mean, look at this. The bullishness is starting to break back below the 15-day moving average, which we really haven't done. Yeah, maybe you could say in July here we got 2, but then we reverted. We really haven't seen a downward move since it looks like the middle of May. This could be the beginning of something that is horrendously ugly for AMC for a very long period of time because that move that we're seeing, the volume that's following through, the type of volatility moves, which are just weird. Like these volatility moves are just weird, which is when you see that price is driving the derivative of volatility because volatility was clearly rising all the way until the 14th. 14th was Monday when we was down 35%. Now you see the volatility just gapping lower and that correlation is also going lower. What that's telling you is that the price is now starting to move up. That's purely mean reversion, and it's affecting the way that the volatility can move. Because volatility doesn't move like this. Volatility is usually much more of like rolling hills up and down. You can see a little bit of like chunks, but when it goes down, it usually trends down very comfortably. It doesn't go aggressively down like this. So this is letting you know that the move in the price is really driving the derivative of volatility as well as that correlation right now. We look at the range, no surprise here. The price went from the middle of the range on the 11th down to the very bottom of the range, and you were getting a snapback above. The one thing that is very strange is watching the way that the volatility bands are adjusting. You don't normally expect that the top of the range is going to go up and that the bottom of the range is going to dive down just because the volatility is falling. But the volatility band is actually more reflecting the rate of change of the volatility, where you got aggressive. And if I go look at the raw data, you're going to see exactly what I mean. Because if I look at the raw data here is the volatility. Now, this may not seem like a big deal for the volatility to go from 2.5 to 2.2 to 1.5 in the span of 3 days. But you have to think that you're talking about that this is like, you're talking about 40 to 50% moves in a day almost. And that's a stunning revelation when you look at the way that stock markets move. If you believe in the efficient market hypothesis, you should think that all information is currently baked in, and these types of moves should be incredibly rare because these would be multi-standard deviation moves. Like these could be like 6, 7, 8 standard deviation moves happening just recurringly in regular stocks in the stock market during a period of expansion of the economy. That's weird to see. We look even at the ultra fast sentiment. This thing is still rising because of the move that we'd seen over the past like 3 months. From June 13th, since then you wanted to buy, no longer. But tell me what you think in the comments below. Are you long? Are you short? Do you like it? Do you love it? Is this even a good review? And before you go, subscribe to the newsletter. We give you 25 stocks to your inbox, breaking out every single Sunday. I'll talk to you soon.